Imagine a world where you could invest in anything, a piece of a Picasso painting, a fraction of a luxury hotel, or even a share of a renewable energy project. No longer would these assets be reserved for the ultra-wealthy. This is the promise of tokenization, a revolutionary technology poised to reshape the financial landscape as we know it. Tokenization uses blockchain technology to transform real-world assets into digital tokens. Think of it as creating a digital deed or certificate of ownership. These tokens can then be easily bought, sold, and traded on online platforms, opening up a world of investment opportunities previously out of reach for most individuals. This transformation is about more than just convenience. Tokenization unlocks liquidity, making it easier to buy and sell assets and increases transparency, reducing fraud and increasing trust. It's a game changer, democratizing access to investment and paving the way for a more inclusive financial system. The potential of tokenization is vast. It holds the key to unlocking trillions of dollars in illiquid assets, from real estate and fine art to intellectual property and private equity. As this technology matures and gains wider adoption, we can expect to see a seismic shift in how we invest, own, and manage assets. Let's break down exactly how tokenization works. At its core, tokenization leverages blockchain technology, the same technology that underpins cryptocurrencies like Bitcoin. However, instead of representing a digital currency, these tokens represent ownership of a real-world asset. Imagine a luxury condo being tokenized. The condo's ownership is divided into digital tokens, much like a company issues shares. Each token represents a fraction of ownership in the property. These tokens are then issued on a blockchain, creating an immutable and transparent record of ownership. This process offers significant advantages over traditional investment models. Firstly, it removes intermediaries like brokers and lawyers, simplifying transactions and reducing fees. Secondly, fractional ownership allows investors to buy smaller pieces of high-value assets, making them more accessible. Lastly, the use of blockchain technology ensures transparency, security, and faster transaction speeds. Tokenization streamlines the investment process, making it more efficient and cost-effective for both buyers and sellers. This opens doors for investors of all sizes to diversify their portfolios with assets traditionally considered out of reach. The result? A more democratic and accessible investment landscape. The potential of tokenization is already being realized across various industries. Real estate, a traditionally illiquid market, is experiencing significant disruption. Platforms like Lofty allow investors to buy fractions of rental properties with as little as $50, earning passive income through rent payments. Realty, another player in the tokenized real estate market, focuses on high-yield rental properties. Investors can purchase tokens representing shares in these properties, receiving regular rental income directly to their digital wallets. The platform also handles property management, simplifying the investment process for token holders. But it's not just real estate. Art, once reserved for elite collectors, is being fractionalized through platforms like Masterworks. This allows individuals to invest in iconic artworks previously valued at millions of dollars, gaining exposure to a historically exclusive asset class. The applications are limitless. Imagine investing in a solar farm, a music catalog, or even a rare bottle of wine. Tokenization makes these possibilities a reality, unlocking value across a diverse range of asset classes and democratizing access for investors worldwide. The potential of tokenization hasn't gone unnoticed by institutional investors. Major financial institutions from JPMorgan to Goldman Sachs are exploring the technology and its potential to revolutionize traditional finance. These institutions recognize the efficiency and cost-effectiveness of tokenized securities. They are actively developing platforms and infrastructure to facilitate the issuance and trading of security tokens, representing traditional assets like stocks and bonds on the blockchain. BlackRock, the world's largest asset manager, has shown significant interest in tokenization. CEO Larry Fink has acknowledged blockchain as a potential force for transforming the financial industry, hinting at the firm's exploration of tokenized assets. This institutional interest is a strong signal of tokenization's potential. As major players enter the space, they bring with them experience, infrastructure, and regulatory clarity. This mainstream adoption will be crucial in driving the growth and maturity of the tokenization ecosystem. Section 5. A more inclusive future: tokenization and the rise of the retail investor. Tokenization has the potential to reshape the investment landscape, making it more inclusive and accessible for retail investors. By lowering barriers to entry, tokenization empowers individuals to take control of their financial futures. Fractional ownership, a key feature of tokenization, allows individuals with limited capital to invest in assets traditionally out of reach. Imagine a young professional buying a fraction of a rental property, or an aspiring art enthusiast owning a piece of a masterpiece. This increased access can be particularly impactful for underbanked populations who lack access to traditional financial services. Tokenization can provide a pathway for these individuals to participate in wealth creation opportunities, fostering greater financial inclusion. Tokenization empowers individuals, allowing them to diversify their portfolios, access new asset classes, and participate in the global economy. It's a powerful tool for democratizing investment and creating a more equitable financial system. Section 6. Tokenization for emerging markets. A catalyst for growth in Africa. The benefits of tokenization extend far beyond developed economies. For emerging markets, particularly in Africa, tokenization holds immense potential to unlock economic growth and drive financial inclusion. Consider the challenges faced by many African countries: limited access to capital, property rights disputes, and a lack of trust in traditional financial institutions. Tokenization offers solutions. It provides a secure and transparent way to represent and transfer ownership, reducing fraud and empowering individuals. Tokenized land titles, for instance, can revolutionize property ownership in regions where land registries are unreliable or non-existent. This can unlock capital for individuals and businesses, stimulating economic activity. Furthermore, tokenization can facilitate micro-investments in local businesses and infrastructure projects. This allows individuals to invest in their communities, fostering economic development from the ground up. Tokenization presents a unique opportunity for Africa to leapfrog traditional financial systems and embrace a more inclusive and equitable economic future. Section 7. Navigating the risks: investing wisely in the tokenized world. While the potential of tokenization is immense, it's crucial to acknowledge the risks associated with this emerging technology. As with any investment, understanding and mitigating these risks is essential for making informed decisions. One key risk is regulatory uncertainty. The tokenization landscape is still evolving, and regulations vary significantly across jurisdictions. Investors must stay informed about the legal and regulatory frameworks governing tokenized assets in their respective locations. Another risk is platform security. Tokenized assets are held and traded on digital platforms, making them susceptible to hacking and theft. It's crucial to choose reputable platforms with robust security measures and insurance policies to protect investors. Due diligence is paramount. Before investing in any tokenized asset, thoroughly research the underlying asset, the platform facilitating the tokenization, and the legal and regulatory environment. Diversifying your portfolio across different asset classes and platforms can also help mitigate risk. Section 8. The future is fractional: building a diversified tokenized portfolio. As tokenization matures, we can expect to see a proliferation of investment opportunities. Imagine a world where individuals can build diversified portfolios that include fractions of commercial real estate, renewable energy projects, intellectual property rights, and even rare collectibles. This future offers unprecedented opportunities for investors to align their portfolios with their values. Imagine supporting sustainable development by investing in a tokenized solar farm, or contributing to the arts by owning a fraction of a famous painting. Tokenization empowers investors to become stakeholders in a global economy. It allows them to diversify their holdings beyond traditional asset classes and invest in assets that were once accessible only to the ultra-wealthy. This shift towards fractional ownership and diversified tokenized portfolios has the potential to reshape the investment landscape, making it more accessible, transparent, and aligned with the values of a new generation of investors. Section 9. Conclusion. Tokenization and the democratization of investment. Tokenization represents a paradigm shift in the world of finance. It has the power to democratize investment, unlock trillions of dollars in illiquid assets, and reshape the global financial system. While still in its early stages, the technology is rapidly evolving, attracting interest from institutional players and retail investors alike. As we move towards a future where fractional ownership becomes the norm, individuals will have unprecedented opportunities to invest in assets that were once out of reach. This will not only empower individuals but also drive innovation and economic growth across the globe. Tokenization is not just a technological innovation, it's a social and economic one. It has the potential to create a more inclusive, transparent, and equitable financial system, empowering individuals and communities worldwide. The future of investing is fractional, and that future is closer than we think.